Yo, what is good? Hi, TF Mob. It is your boy AB back with another video, and I hope you guys are having an amazing weekend so far. I just wanted to come and give you guys the Friday market review of the week and basically go over what happened throughout the week. I know this is going up a day later than usual. I just was caught up a little bit yesterday, so I figured today would be a better time. And actually, funny enough, my younger brother's coming in town to actually start living out here in Minnesota. So I'm super excited for that to see how that's going to play out for the year. And also he might even get involved with the trading side of things. So we'll see how that goes. But right now, um, breaking this down, I remember on Sunday on my video, if you guys did watch last week's video, you saw that I basically explained that I was going to break down the currency indexes here, which is the DXY, we have the AXY, we have the EXY, and then we have the JXY. And all these charts are specifically for the strength of the specific currency. So the Japanese yen right now is losing strength. It is getting weaker, which means if I'm in any type of any type of pair that has a Japanese yen in it and it's the quote pair or the second pair, let's say like GJ, for example, or AJ or UJ, that basically tells me buy those pairs because what's going to happen is as this strength weakens, that means the Australian dollar might get stronger, the Great Britain pound might get stronger, or the US dollar might get stronger. And in this case, that is exactly what happened towards the end of the week was it got stronger and then closed bullish. So it looks like now price is trying to make that reversal and probably hike a little bit higher basically after this retest zone. That was what it looks like off the weekly. So if I go back down, right, um, you'll notice that if I drop down to like the 3 hour on the DXY, I go down to the 1 hour, you can still see all the candles print out just fine as if you were on a regular chart. But that's not the case for all the other pairs because these other indexes such as the Australian index, the Euro index, and the Japanese index, they have a lot more session breaks, and that's what you see all these gaps for. It's just the open and closes of different times in the markets, and that's why it's printing out choppy. So if you want to smooth this out, what I use is Heikin Ashi candles, and Heikin Ashi candles are read differently from regular candles, but they are easier to use to determine the trend of whatever you're using. So what I like to do with the DXY or the whatever index I'm looking at is I break down my zones the exact same way on the high frames, but except what I do is I basically play price, I swing price from zone to zone. So if price is right now, it just looks like it tested my TP1 down here, but it didn't break it. It just broke structure here by coming back up, coming back down to test low, and then broke structure. So now it looks like the trend wants to reverse. And a good little pointer with the Heikin Ashi candles is that the momentum when the candles are printing large generally is a good indicator that price is just going to keep going in that same direction. But it's not until price fails to continue to break the lows that it's now ready to reverse. So at this candle close, you would have known now price is going to pivot. So the US dollar is going to get stronger here, and you can start taking the price up to your next zone, right? So because I'm taking it from zone to zone here, whatever is being printed in detail on like, let's say, for example, AU, I can now line it all up. So example, AU, if this is going to go up from up to TP1 at the very least, we know AU is at least going to drop down towards TP1, right? Because the US dollar is going to get stronger. And if we look back at the Australian dollar, since they're both correlated, we see the Australian dollar is going to drop. So basically that plays hand in hand. So next week we have a good outlook on this setup for a potential sell down. So that's a good example of how I use the DXY with the strategy that I teach you guys. Because keep in mind, I tell you guys I always have the overall map marked up. So when I did the markups for like from top down, it's exact same. The weekly low, weekly high, and I'll even put it back in candles so you can see weekly low down here, weekly high up here, and then on the daily, or excuse me, on the weekly right here, we have, I don't keep track of the candles on here like I do on the other pairs because I want to keep off as much detail on this as possible. All I need this for is the strength. And if I draw the line in the direction where it's going, like right now, I had it going down. Now I look like price is trying to break structure and come back above. So now if I'm looking at this, this is starting a new trend, right? So I could draw this is valid for me to start a trend line right here and then take it up to TP1, TP2, and potentially TP3. Now at this point, I would watch and wait, and then I would switch it to Heikin Ashi and then wait for that reversal. So it could test right here, break structure, come back down, break trend line, and I'll draw another line going down. But I like to keep it at 2 lines max, and you'll know that way when it's going to pivot, because you know it just came off sells, it keeps respecting this, going to keep buying, so on and so forth. So every time it comes near your line, if you see it about to pivot again, you can go back on your pair on like AU and then keep selling it down. Okay. So this past week was a little bit choppy for me. It did throw me off um in the middle of the week. In the beginning, I was kind of keeping on point with it. But the biggest thing was this retest that ended up happening. So when we started from the top, right, we have the structure of price on the monthly looking like it still wants to sell overall. We had this weekly, this last month test this low, and we have this candle where it already came and tested highs at the beginning of the month, and it's only been 6 days in, and we're now heading down towards the downside of this candle. So if I go to the week, right, the week started off by testing the last week's peak high first, and now we came back down and then closed down to the bottom side of this last week's peak low. So this is looking like it wants to set up a bearish engulfing weekly confirmation. And this also looks like a break of structure on our daily, because we had price come down, come up, create this high, created this low, and then create this low high. Now within all of this, I was shaken out so many times because of the timings of it. So you'll see when I saw the break of structure on the daily, right? I seen the break of structure when it was coming back up around here, and actually when it's coming back up around here. So in my head, I thought the price was going to come from here and just work its way down. But what I should have did was waited for 4 hour to come up fully, create one high, come down, create another high, and that breaks the structure, right? Because this is now, there was a high, this is the low high. So this would have insinuated now this confirmation is the real sell. None of this where I was selling was a real break of structure, because you can see right here, price came up, created a high, it came up and created a high low, right? But ultimately, this previous low was respected. It never got broken, and then it wicked up. And then this next one came and actually broke this previous high. So it was still in trend. So I didn't notice that. But of course, when you review markets, this is why we do it. It's to help you go back and be able to see and analyze where things went wrong. So here, this initial week, it did start off with a great sell, broke out of our trend, our channel, or a bear flag, and then came back up, tested, and then continued to drop. So these two were great setups. I didn't secure a full 3-to-1 on this, and I grabbed profits early. And then this one was one that I didn't. Actually, I'm pretty sure I closed this one out. So this was the other one that I didn't close out fully because price went in my favor and then whipped right back, and I was already at break even. So a lot of what you'll see when you see my setups is like after I got stopped out here, I just stopped messing with it because I couldn't tell when the real sell was going to happen. But sure enough, it was at the point of interest, and that was a really good zone. And the only reason why that point of interest was there is because if you look in the past, right where this flip zone is, right where this swing low was, because this low down here led to this high breaking. So we had a swing low there, and then that created a flip zone potential here. So now, and the only reason why this became a potential flip zone is because price came back and broke it. So when it broke it, if you go down on the 15-minute, there was a point of interest in there. Okay, so institutions had a level, right? This was the last up candle before the down candle that led to this finally breaking. Okay, wasn't until it printed right here. This was the real break. The last up candle that led to that break. So institutions marked this as a point of interest. When price started trailing back to it, you'll see it broke above. They threw a false breakout, came back and tested, and then kept testing. And now we had the full sell down. And then there was probably some news volatility in there right here. Non-farm payroll. So it's NFP. It's first Friday of the week. I didn't trade NFP because I was definitely, I was just like, by the time I had got stopped out as much as I did throughout the week, I didn't want to bother the market on Friday. And you'll see on some of the other setups, like there was definitely a lot going on. So what I want to try to do is brush up more on like my lines too, because I don't want it to look like this where it's all a mess, where you guys can't really comprehend what's going on. I 100% know what's going on, but if you're new to my channel, you're not going to know if you don't understand what my lines mean, right? So everything will look very choppy, but if we start from the month, I'll basically dissect it for you. if you're new, and you go see here, this is our previous month. This is our current month of August. And off the previous candle, or off this new candle, price first tried to buy and test its high. It couldn't break it, came back down, right? As it comes down, it's selling off. Price is now heading down towards this low side of this wick to come test the lows. Now, as it's coming down to test lows, the weekly is going to try to create structure to match that, or it could reverse because I seen this bullish engulfing. Now, in my mind, I was like, this could be the point of interest that they're trying to retest before we go down. So they're probably going to collect some sellers' income and then try to go down and wipe out these buyers back here that are holding from this previous demand zone. So right there, since I know we're heading down, it's kind of the same as AU. You see, like there's still that bearish structure there. So I just got in early. They faked me out with a really crispy buy. And if we know anything about my weekly chart, once I'm able to identify my last week's peak high and last week's peak low, it's easier for me to understand where the market's trying to head by the end of the week. Because remember, our candles always start with a fake move generally, and then it'll end with the real move by the end of the week. Same here. It started with the fake move, and by the end of the week, we're up on the real move. Okay. So that's the part that I'm still trying to get better at, is executing on the real move and not getting caught on the fake moves. So right here, we see here the daily was trapped. Okay. So you'll see the peak weekly low of my previous candle was down here, peak weekly high was here. Price is playing within it. It tested, gave me the bearish engulfing. And then now we're getting tests, we're getting retests. And then price continues down to the previous low or the current swing low. If I go down to the 4-hour, so like as I'm looking at this, guys, it's not as much, so much so as looking at all the little details right away. When I'm on the daily, this is all I really see. Break a structure. See what I'm saying? Real simple. Real simple, right? The structure is still there, right? So you have this high, this low to this high, higher low, higher high, higher low, higher high, then high low, lower high, break a structure right there. That's the entry. So market structure is always your guide when it comes to trading. You have to just trust it. Okay. So once we're on our daily, you guys remember I always mark my points of interest from where price was relevant. So price was here. I said, okay, if daily wants to break the entire structure on the weekly to keep going down on the weekly, it has to smash this. If it breaks this structure up here, then I know it's going to keep going up. That's why I mark these both as TP1, because they're going to create a break of structure on this candle that will, on this chart, on the weekly chart, that'll continue it. And same here, vice versa. If it comes down here, if the weekly ended right here, let's just be realistic, it's probably going to start breaking and continue down. And let's say even next week, if next week ended down here, it's probably going to continue down a little bit. It may even just come down to here and then bounce. You never know. But that's just, we're trying to understand direction where we're going. So if I go to daily, we know now we're heading down, right? And then if now we know that price is trapped between the yellow lines for the daily, we understand what those green boxes are for. And now if I go to my 4-hour, we keep it simple by marking our swing low and our swing high. Once I did that, I was able to understand, okay, we're selling here because price fell back in with the weekly line, comes down, tests the high, comes down, continues to do the same. As it's coming down in this situation, I try to find an entry in this candle. I put my stop above the previous high. I try to close it out. They come back, stop me out. I'm out at break even. And then right here, when they came up and like stopped me out, I thought this was a valid buy because it was respecting, and I thought they were going to reverse the market to continue up. So they faked me out on this wick right here. Then they just whipped it to the downside. And when they whipped it to the downside, right, had the breaker structure, and boom, gone. So they know what they're doing. I think a big part of it is just, again, stick to your market structure, trust what you're seeing, because I would have never got caught in this, and I would have just doubled down on the same situation. And again, the only reason why I mark this right here as a demand zone is because for a brief period, price was moving sideways between here and here. When price broke out, this was a area of a pool of money left behind. Okay. And keep in mind, they buy and they sell. Market makers buy and they sell. They do both. For us, we don't got the money to do both. So they're gonna do both because they can. And once they come out, once they wipe out everybody like this, all these sellers out of there, dead, cooked, accounts probably blown, right? If they didn't use a stop loss. And once they do that, right? Now they want to bring it back. If it respects and bounces, right? If it respects and bounces, they're gonna close these now because it's cheaper. But if they're not trying to, if they don't respect this and it continues down, we're coming out to wipe out these guys and they're going to make money both ways. Because now they're in the cells up here too. You see what I'm saying? So not only do they wipe these guys out, they're able to close these old positions and make money the whole way down. Okay. So that demand area was invalid. But now it's a new area of supply. Okay. Because you can see here, the same thing is happening respectively this way. Right. So price breaks out this situation, is going to come and test. If it respects, we can look to take that down. So there could be good setups next week. And this is part of why, again, I always tell you guys, stick to the math. Make sure you guys do the math with every setup and you guys will be good. For sure. So again, same here. I didn't fully hold my moves on AJ, but this was actually a good 3-to-1 setup that I did end up winning. It was really like, when you understand my lines, all this stuff plays out really well off of it. But as far as this, we can see here on the 1 hour all the behavior. Okay. So we start off the charts. This was a good setup for me because I was like, this was a no-brainer. My daily open started here. You can see the time down from the open is 0-0 flat, right? So the daily open, I put it usually at the open of the candle because the candle opened here first, coming off this last one. And once I match it to 0-0, I know whatever direction they throw first is the fake direction. So once they came back up here, I was like, okay, this is probably the real move of the actual daily candle, which was true. So if I go back to the daily chart, go back to that same spot, you'll see they threw the wick. One second. It was right here. So they threw the wick here and then they pulled it back. If I go to the 4 hour, oopsie, hold on a second. Oh, excuse me. It's down here. They threw the wick down here. Then they pulled back up. Once they threw the wick and they're coming back up, the buy was valid, right? But that was the thing. I didn't know how high it would go up. So I took a piece of it, took it to the first zone. And then after that, it continued to respect from there. So this is what is always tricky for me, is when I get my profits and then I know I hit one zone, is figuring out the timing to get back into this. Because usually you'll start like buying maybe here because you think it's going to continue, it's consolidated, it's ready, it looks like it's ready to go, and then they stop you out. Same thing here, you get the engulfing, they come back, stop you out. So this is the part where they start messing with your psychology. And this is why after you get these types of wins, you want to give it some time, give it maybe even a session, just step away. Because chances are, if you're trying to re-enter and force it, you're going to get caught up in the initial stop outs before they finally continue. So this was clean right here when they're finally ready to go. And as we know, this was a mid-level that price started to respect. And then once it got here, price continued up. And you could see these were all really clean setups if you just held. Honestly, if you even took this all the way up to your point of interest, that would have been valid as well. So now at this point, price breaks out, comes back down, and creates this huge demand area after breaking out of last week's peak high, comes down and tests the top of it, right? And it did break the swing low, but closed back within it, and then broke its structure, but closed back in it. So swing lows, it can break, but if price closes back inside of it, that's a good sign. It's going to probably reverse too. So when it closed back in, that's exactly what happened. Price reversed and gave you another buy opportunity to come test the previous swing high. So if we're looking at this on a 4 hour and I'm looking at this on a high frame daily, I'm thinking this might actually continue higher going into the future weeks. So if I go down to the weekly, right, you have to think, this is a peak high, peak low of last week. I'm going to shift it all for this next coming week. But if we know that's what was last week's and we close back in it, it's possible this could go continue all the way up and then wipe out everything on the left. Might go up for TP3. See, there's room still left to the upside. So all this wicks and stuff is basically like fake outs at the moment. Just for now. Just for now. So we'll see. Let's go down to UJ. Same. So price breaks out, starts with a great sell. I seen the setup back here. I wish I would have took it. I didn't, hesitated. I think it was UJ, AJ, and GJ. All of them I missed the sells. They were great, really nice. AJ was blatant. By the time these two had played out first, UJ and GJ, but by the time I seen AJ, I was like, man, do I trust getting in right here? I should just do it. Didn't do it. Sure enough, it popped off. So then I seen the buy opportunities. I knew all these were in their pullback phases, so I wanted to take advantage and get on board with that. You know, if it goes one way, throws a hard move one way, it has to come back the other way. That's just how the markets are gonna always work. So as far as these buys, like I try to, you know, get really dialed in as far as finding as much buy entries as possible. But I kept getting shook out and stopped out, like where price would go in my favor, come back, try to wipe it out. Like right here actually was the example. So went in my favor and then came back and wiped it out. Made it seem like it was going to continue, then completely wiped it out, and then tested the actual level that it broke out of, right, and create the demand zone. And now this is valid and shot up. So NFP was really on point with those high frames. So again, like trusting market structure, same thing. Price broke out of your high. When it broke out, they actually came back as they kept buying. And this is the actual retest. So if I go here onto the weekly, same deal. AJ, UJ, and GJ are all trying to pull back up. I feel like AJ and GJ have the best chance to continue up on a high frame basis because there's still a lot of room left to the left side for those two pairs. Like this is going to be a whole W formation. So by the end of this, like there's gonna be a couple years of buying when it comes to GPP if they're actually trying to get their money back up there. Because you got to think somebody sold here, somebody sold here, somebody sold here, somebody sold here. There's so much money left that they have to go grab. So they'll make it happen, and they'll make it happen quickly if need be. Because think about how quick this type of movement was. That's very aggressive, very abnormal. So it's very likely that some type of rush will happen where we're doing the same thing on the way back up, probably during the winter even. So, and this looks like it's breaking structure. So price came down and you had a bullish engulfing, comes up, and then creates another bullish engulfing. So this is our close of Friday. If we know anything about bullish engulfing, that's a valid buy market. So if we go down to our 4 hour, the structure is there already, right? So now we can wait for price to come back and retest this line and then look for our entry next week. Okay. So I'm not gonna lie, next week or this Sunday when I break down the charts for you guys, I'm honestly gonna just get down on my 1 hour. I'm gonna clean up all like the swing high, flip zones, the points of interest, and we're gonna sharpen up our peak highs and peak lows of last week. And then that way we'll be able to just dial right back in and just follow along with the outline of everything. Because again, we're ultimately using the outline to understand what's happening at all times. And we're mainly trying to time our real swing entries in the middle of the week, sometime around the Wednesday reversal, because again, they usually throw their fake move at the beginning of the week. So I hope you guys did enjoy the video there. I do plan on doing different like right now I'm not doing so much with the channel as far as edits, only because I'm not even settled in at my new place yet. I mentioned I was supposed to be getting a new apartment. So when I get settled in there, that's really when I want to start like getting into the editing and really making better quality content. But right now I'm just trying to pump you guys the signals and just like the outlooks so that you guys can see the repetition in this craft, because I can take losses one week, I can take wins one week, but it's not going to change the fact of how I'm like approaching these charts and how I'm trading and how I'm able to see and understand and dissect what's going on from week to week to week. So it's really just a matter of time before any one trader finds their consistency with work like this. But again, you guys, I hope you guys have a great weekend. Please like, comment, subscribe. If you guys feel like you have any loved ones that need to see this, definitely share it to them, and feel free to leave any type of feedback in the comment section for me. So again, hope you guys have a good one, and peace out, ITF.